Welcome everyone to our Building Passive Wealth webinar. My name is Vincent Beleja. I am the Chief Investment Officer of Stallion Capital Management. We're located in beautiful Austin, Texas. We'd love you to come visit here, except for right now. It's about 100 degrees outside, but it's cool in here. Can't wait to talk to you guys and tell you all about what we're doing with our new fund launch. But today, we're going to be talking about passive income. We're going to be talking about some of what investors are really looking for and what they are not looking for. So I'm going to go ahead and bring up the presentation and go through the agenda quickly, and then I can't wait to get started. I do like to have interaction, though, in a webinar. And so we're going to have the chat open. If you have any questions that come up through the presentation, just go ahead and type them in, and then they're going to show up on my screen in front of me, and then I will address them. We are going to have a Q&A session at the end, but I do like to have a little bit of interaction throughout the presentation. One thing I would ask of you, though, is we're going to have a few polls that pop up during the presentation. There's going to be 4 today, and if you could just click those as soon as they pop up, we'll give it a little bit of time. But I want to get a little bit of information from you and see what you're dealing with on your investment journey. So as it's time to get started, I think it's just after 2, so I'm ready to go. And thank you again for giving me a little bit of time on your Friday afternoon. I really appreciate it. Can't wait to get started. So today, the agenda is going to be the investor challenge. What are investors really looking at today? What are the hard things that they're facing? And then what do investors really want? What would make their investing life a little bit easier? And then how can we help provide some of those solutions with our new fund? So we're going to be talking about the Investor First Fund today. We're going to go into the mechanics of how the fund actually works, why it works, and why we've been using this strategy now for almost 20 years at Stallion. We're going to talk about what makes us different, our track record, the mistakes we've made, the wins that we've had, all while operating as a capital management company located in Austin. And then we're going to look at, is this appropriate for you as an investor, or is this something that you just want to keep in the back of your mind as you're looking at adding new investments to your portfolio? And then we'll have time for Q&A. We'll have some questions that'll be coming off the screen that you guys can type in, and then we'll have some Q&A that's built in already for the most commonly asked questions for this type of investment. So with that, I would love to get started. And the first poll, let's make sure this works, is how would you describe your investing experience right now? So I want to go ahead and put this first poll up. Would love to have some quick participation, and then we will show the results. So if we can bring that up, please. Give just a few seconds. And team that I have here, do we know if those poll results are up and in yet?
Yes.
Great. Okay. Is there a way to show that on the screen? I would just love everyone to be able to see those poll results. Okay. Unfortunately, I can't see those. Is there a way that a laptop could be brought to me so I could? Give me just 1 second, guys. I've got to be honest. I have a fantastic team, but this is my very first webinar. We do presentations like this in person, and we signed up for a webinar about 4 weeks ago. And I thought maybe we'd have 20 or 40 people that wanted to sign up and see about this, but we maxed out what we have. So we hit 500. And so that's exciting. So everyone that can be on here through Zoom is on here. So let's look at this. We've got beginners, mostly on the investor side. We've got a good amount of intermediate and experienced, not really anyone that's on the professional side. And then as far as a real estate experience, because we are going to be talking about real estate today, a few have owned a few projects in the past. Some have invested passively in real estate. So it's a great poll. So we can go ahead and go back off. I just like to know kind of where people are, and I think that's interesting for the rest of the people on the webinar itself. So moving on to the investor challenge. So today's market, I think the biggest challenge that people have been dealing with, and this is individual investors, and this is actually professional money managers, is volatility in the markets. So much has happened this year that have moved the markets up and down. And it's really been like that for almost the past 5 years since COVID came around. We've had big market dips, we've had big jumps. In general, the market has moved up and to the right. But for investors who really care about security or care about predictable investment results, it's been a difficult ride. So that's kind of the big thing, is what can people do to try to reduce some of that volatility, to try to get some predictability. Unpredictable stock returns, as we talked about. In bonds, we've been in a low yield environment. It's a little bit higher now, but at the same time, interest rates have been moving around, and a lot of people that were invested in bonds before interest rates increased had a big hit to their portfolio. The other side, what we just mentioned, is on the rental properties. It's not exactly passive. I've owned a number of rental properties in the past. We actually have managed some of them in some of our investment funds, and it's not exactly passive. It's actually a fairly active environment that people have to be involved with. So sometimes if you're having a hard time getting that rental yield, that isn't always predictable. It's not always available, especially if you have any vacancy issues. So for those that have a portfolio of rental properties, it can be excellent on the tax advantage side, but for the income side, especially if the properties are a little bit older, you can have some volatility there. And really what it gets down to at the end of the day is, for those that are at retirement or nearing retirement, looking at getting all the income that's needed through that journey can be a little bit daunting, because yields can be up, yields can be down. What we're trying to do on our side is fix some of that. So let's look at what investors would really like to have in this market. So the first thing is consistent, predictable returns. That's really what we've built this fund on, and it's really what we've built our company, Stallion Capital Management, on, is the ability to predict returns by investing into assets that have a very regular income generation. So we'll get very specifically into that in just a minute or so. But what investors do really want right now is consistent, predictable returns. And most of our investors, certainly, they want to know how an investment works. Does it make sense? Is there a correlation between the economy and their investments? Do they understand why you have increases or decreases in stock prices or yields that are coming out of savings accounts or bonds? Simplicity is a really big deal. Can you understand how your money is working for you and where that it's going? The other side deals with investment managers. I tend to be a fairly relational person, and we've had investors that have been with our company for almost 18 years now. In fact, a good friend of mine, Jerry, I got to take him out on July 1st, his birthday. Jerry's a little long in our relationship. We've probably known each other for 25 years, and we got to celebrate his 91st birthday. Now, not everyone certainly is 91 years old, but it kind of gives you an idea of what it's like to work with us. We like to be on the phone with our clients, and I think that's a really big deal. Is, can you get to the person that's managing your investments? Is it easy to get them on the phone? Can they explain to you what's working and what isn't? And can they explain what their strategies are over this next year? And, I just got a recording that says, is this a recording or is Vincent really here? I promise I am here, and I will answer the rest of your question, but it is August 8th at about 2:10 p.m. in beautiful Austin, Texas. So I am here. I promise I'm not AI. I'm not sure I can prove that these days because the technology is so good, but I am here in the flesh. So thank you for joining me on a live webinar. And that's why I think the open and fluid communication is such a big deal. It's great for you guys to know that I am here. It's great for you to know that you can call me on the phone in Austin, Texas. And if you are in the Austin area, we'd love you to stop by our office, which is located in North Austin. At the end of the day, though, investors want to be able to see and predict what their investments can do. And honestly, that's not a very common thing in the investment world. If I asked a number of my investment manager friends, what is the stock market going to do over the next 12 months or so? Half would probably say, well, we think it's going to be up. half would say it's going to go down, and there's probably some in the middle that say, we just don't know. It's going to be flat, or we're just going to adjust. And that makes sense. Our investments are a little bit different. Our investments have a programmed return inside of them. And so let's talk about the Investor First Fund. Just a little bit of background about Stallion Capital. We're fund managers. The Investor First Fund has not been launched yet, but it is going to be our 5th fund. So we're seasoned fund operators. We've been running investment funds since 2012, but we feel like this is going to be both our simplest fund and our most purposeful fund. So let me tell you a little bit of the details of what we're offering. It's a fixed return on an annual basis of 8.5%. It's a strong yield. And now, I do want to tell you that this fund is just for accredited investors. And we can talk about what accredited investors are at the end of the presentation, but it is limited to them. But the idea is that you'll be receiving an ACH, or basically a check, mailbox money, in your mailbox on a given day of the month, every month of the year, every year that you continue to invest with us. So current yield is going to be fixed at 8.5%, which is a strong yield, a little bit less than 1% per month. And the minimum investment is going to be $100,000, which is typical for private investments that are, and that's why we have the limitation for accredited investors. But it's that idea that you can make an investment, receive a series of checks that come in the mail. Honestly, most of our investors just get an ACH directly deposited into their account. And then when it's time for you to redeem, if you ever choose to, you can request your money back and all the money comes back. That's really what the program is. Now, we do have a 12-month commitment, as you can see on the screen. And that's typical because I'm going to describe what we're actually putting the money into. And that's what makes the big difference about why we have a commitment period, why the minimums are so high, but also why we can provide such a great rate of return that's really solid month to month. So a little bit about the strategy of what we're doing. We've talked about real estate, and we have some real estate questions, and you can see some great real estate behind me, because what we do as a company is lend money on real estate. So as I mentioned before, we have a few funds that we operate, and with those funds, we lend out on real estate projects in the Central Texas area, and we generate interest income that is then paid to our investors through our funds. So as you can see, I am standing by the Capitol in Austin, Texas. Austin is home base for us. And for anyone that's familiar with the great state of Texas, or the nation of Texas, for those who might live here, we lend all along the Interstate 35 corridor. We lend up from Dallas in the north, a little bit in Waco, then down to Austin and San Antonio. And this is one of the best real estate markets that we have in the country. It's growing. We're going to look at Texas a little bit later in the presentation. But we are lending money on real estate, almost like a bank. We're not a bank, but like a bank, we make real estate loans. And like a bank, we have investors instead of depositors. So we are lending money out consistently on real estate projects that are short-term in nature, collecting interest from those real estate projects, and paying that interest through yield in our funds to our investors. So let's get a little bit more detailed about how the system actually works. So we're about to launch the Investor First Fund. It's going to be launched within the next 2 months. And today we're looking for people that are interested in being some of the first investors in that fund. But in a simplistic way, we're launching the fund and we're looking for new investors to come into our fund. I imagine that a number of our existing investors will take a look at the fund as well and look at making an allocation. But as money comes into the fund, we're also going to be getting applications in for loans. And I will tell you that we receive more applications for real estate loans than we ever have. We have an excellent origination department right now that is really plugged in to the Central Texas real estate market. We're well known because we've been lending money since 2007. And so one of the reasons that we're even launching this new fund is because we have so much demand for capital. So, and Austin, Texas, Dallas, San Antonio, and Houston too, are all growing real estate markets. The state of Texas has kind of been exploding over the past 5 years, really longer than that. And we're seeing is a ton of opportunity. So investors come in and join the fund. And then we have loan applications that come in, and we're going to be originating those loans. They're going to be going through our underwriting process. We'll talk a little bit more about that in a second. And then once those loans are approved, we're going to be funding those loans inside of the fund. As we fund those loans inside of the fund, the borrowers are going to be making monthly interest payments, just like you would on any mortgage, and those payments are going to go into the fund. As that yield is being generated in the fund on a monthly basis, the investors are going to receive the first 8.5% of fees on a monthly basis. And what will happen is, as those loans pay, typically there's going to be some type of value add. And the value add means you're doing something to the property to make it more valuable. In most cases, you're going to have a construction project, maybe multiple units, maybe a single family home. They're going to be building, the borrower's going to be building that project and increasing the value. Then they will typically sell that property. The money will come back to the fund, and then that money will be lent back out in a continuous cycle, always making money for our investors, always generating yield. And what is really important about the Investor First Fund that sets this fund apart from some of our previous offerings is all of the interest, all of the fees, everything that the borrower is paying is going into the fund, and then the investors are being paid their portion first. That's 8.5%, again, on a monthly basis. And so as we're starting this fund up, those first investors are going to be the first people where the money is going to be going out, going into real estate loans, collecting interest. It's going to be paid to the fund and then paid right back to the investors on a monthly basis. Again, this is our fifth fund that works like this. So we have had 3 real estate debt funds previously. We have 2 that are open right now that are operating. But where I wanted to go with this fund was I want to give the simplest, really having the simplest mechanism, just having a fixed fee. Because what does happen on our other funds is it is variable. You might have a 7, you might have an 8, more, you might have less. I just want to have predictability. And that seems to be what's resonating with a lot of our investors right now and a lot of the people that we're talking to. It is, if you can just tell me what the return is going to be and tell me that it's going to be on a consistent basis, I'm interested, is what I've heard. And so this is exactly what we're trying to do to satisfy that demand, is let's set up something that's simple, that's predictable, that works in a way that we've been already operating for 12 or 13 years in the fund model, and let's just offer it to a larger market. So let's talk a little bit about Stallion as a company and why, and really kind of what our investment strategy is. What's important with what we're doing is because we are doing real estate backed loans, right? We always have that subject property inside of our loan. All of the investments that we do are backed by real, tangible assets. And I'm not sure why, but that's always been how I like to invest. And that's how I like to run an investment portfolio. I want to have a tangible asset that backs up my investment. It's very important for me. And the way that we lend money is we're lending a portion of the value of that property. For those that are in the lending markets that know about loan-to-value ratios, we're lending at a 70% or less loan-to-value ratio. I want to have great equity in every investment that we do. If everything pays according to plan, fantastic. We generate that yield consistently to our investors. But if something doesn't go right for some reason, I want to be able to have value that I can go back on and capture to protect our investors' capital. And that's really what you'll see a little bit on this slide is it's really about capital preservation. It's about tangible assets. It's about not losing money. Now, I will say that like any investment, this investment does have risk and does have risk of loss. But our whole strategy is about capital preservation and generating a solid yield, 8.5%. The important thing for us too is having that local expertise around the real estate market. We're lending literally in our backyard. We've been lending in Austin since 2007. We know the Austin market very well. Dallas, the same. San Antonio, the same. We're not currently lending in Houston, but we know that market well also. We like to be close to the real estate. And that's part of this tangible asset strategy, is that I want to be able to drive to a property and see it, to put my eyes on it. We want to be able to monitor the progress as it's being built. We want to know that the dollars that we're investing in as a fund are building value and creating value for our investors. So when you look at things like downside protection, wealth preservation, having real estate that is very tangible and everything is backed by something that's real, and really knowing that market, it's a big deal for us. We feel like that's the safest way to invest, and that's really the market that we're trying to serve, are people that care about capital preservation, that care about making their money work hard, but don't want to take outsized risks, at least with this part of their portfolio. Now, for a larger portfolio, where you might have stocks, bonds, mutual funds, ETFs, maybe some crypto, maybe your own land holdings, I think this is a part of that. And that's where diversification comes in. I think this can be a part of a strategy, but what's great from the diversification standpoint is our investments are not tied to the stock market. They're not correlated. They're not correlated to even the greater real estate market necessarily, because we're lending money against real estate. I'm going to answer, we just got a question about what happens if dividends aren't paid. I will certainly get to that in just a second. But the idea is that this is a part of your overall strategy, but it's one of the safer parts of your overall strategy. It's predictable, right? And it's backed by hard assets. So as a company, that's what really makes Stallion different from what you're going to see from your normal investment advisors who are selling publicly traded securities. Again, these are private securities, accredited investors only, but for accredited investors, it's a fantastic way to diversify, especially if income is important to you. So at the bottom of the screen, you see that we have the Fidelity and the Schwab logos. We've been on the Fidelity and the Schwab platforms as well, so we're trying to make it easy. Not a lot of private investments are on public platforms. We are. So it's very easy to buy into our funds. This new Investor First Fund will also be on those platforms. Our existing funds are on those platforms now. And so you have the oversight that comes from being on those platforms. And then the fund is also audited. This one will be as well. Our existing funds are audited on an annual basis with certified auditors. That's part of being on these platforms. So this fund, even though it's new, is going to go right in line with the rest of our funds. But that is the Stallion difference, is transparency. You can see what's happening. Everything is on the platforms. Whether you want to do an investment on a platform or whether you want to do something directly with us, we can handle that either way. We have an online platform that you can get in, look at your account, look at tax statements. We try to serve up everything that you might need right to you so that you know what's going on with your account, even though it's private. You can have access to it, and you can get access quickly and easily to our staff to answer any questions that you have. And if you have any questions for me, I'd love to answer any questions or address any concerns you have as well. It's kind of like the Stallion family, but that is what makes us different. That's why this investment is so different than what you can go get with every other investment advisor. So moving on just a little bit about the company. I mentioned earlier that we have a ton of demand for capital right now from borrowers, and that's true because we have our own origination department. So we have a couple of great guys who are working hard to find the right investments for us and for you in our lending platform. And we have never been busier. They've done a great job of sourcing new loan inquiries that come to us, applications. And of course, that goes through our underwriting really process where we have a loan committee meeting, underwriters, we're taking a look to see what is the best place to put money. We have integrated servicing, meaning that after those loans close and we're generating income for the fund, all of those loans are serviced in-house. So we're very close to those investments. We know exactly what's going on and what the performance is going to be. And then we also have portfolio management. in portfolio management is when both you're looking at the loans that we have, but then if any of those properties go into default, if that does happen and you have to go through a foreclosure, which occasionally happens, we are also well acquainted with owning and operating properties to then sell them and then recycle that capital. So everything is under one roof, and that way we can make great decisions. We can get feedback from the property management side, from the servicing side, find the right borrowers to make sure that we're lending money to the right people, to the right projects, to get the right yield for our investors. Because at the end of the day, we're doing all these things to produce that very regular 8.5% check that comes to our investors every month. So everything has to work in the stack. We have to be putting money in good places, having the right borrowers with the right projects, with the right internal team to make everything work well. But that's what we've been doing now for over 18 years. And that's what we're going to continue to do, but probably just on a larger basis because we are growing and the Central Texas area is growing. And the use of private money, which is what this is called, is now very mainstream. In fact, there's probably a little bit more private money that's been going out over the past few years than even traditional money, because banks have stepped back a lot out of this space, which is one of the reasons why there's such a great opportunity to put capital out and to be able to earn a great return on your capital. So let's keep going just a little bit through the presentation. I only have 50 slides left. I promise that's not true. We're getting there. So we've originated over $800 million of loans since the inception of the company, 18 years. We manage about $160 million right now. We manage that for accredited investors inside of our funds. We manage that for family offices outside of our funds. And we're even looking at creating a family office fund in the future, because we're having in family office, that might be a new term, but that's when you have a fairly significant family wealth, and now they're wanting to come in. So it seems like everyone across the spectrum, accredited investors, family offices, even professional investors who are managing pension funds or insurance funds, they really like this private credit space. And they like it because you can have a good yield, great downside protection, and very regular monthly income. And that's a great combination. So a lot of capital is coming in here because it's predictable. And over the long term, we've shown that we've had a really great track record in providing investors regular income, or if they want to reinvest, they can keep it reinvested, but regular income with great downside protection. So let's talk a little bit about the past projects. We're not going to get into the specifics, but these are all Stallion projects. These are typical of loans that we would fund to either purchase projects or to fund the construction of these projects. We're right now, while we've done both residential and commercial projects, we are mostly focused on the residential side. We feel like there's a little bit more security on the residential side, and there's a ton of demand. We're trying to be careful right now with the office markets of commercial. I do like the light industrial space, but really we feel like the residential market is the best place to put money right now. Overall, we're able to do loans that are reasonably small in nature, $500,000 to $1.5 million or so. And that's what helps with the diversification of the fund, and helps us to make sure that we're generating those yields regularly on that basis. So typically someone will bring a project to us, they'll show the plans that they have, we'll do appraisals and valuations on those properties, we'll look at their experience, we'll look at what the actual plan is and the specifications of the build, we'll approve it, and then just like any other lending institution, we will lend that money out a piece at a time as they're building that project up. And then when it sells, then we'll get a repayment on that project, or they may want to keep the property and they may want to refinance us out. And if they do that, then we'll just get paid off and we put the money back out. But these are projects that you see on the screen in Dallas, in Austin. I think there's one in San Antonio as well, but these are typical for us. They're nicer properties, usually with a value of anywhere from $500,000 to a couple million. And we like to be lenders on new nice, marketable properties that are located in great areas. We don't typically do older properties because we feel like there can be deferred maintenance, there can be other issues. And if you look at what really sells well right now in the real estate market, it's newer properties that are built well, that are built with all of the latest trends and features, and those are the things that sell well. And that's really the system is. We have builders that come in, add value, build, sell, pay it off, and then borrow again. And they might be doing that on multiple projects. So that's really just a taste of what it looks like to borrow from us on one side and then to lend through us on the others. And that's really the thing that should be understood when looking at this fund is all of these projects, we have liens on all of them. They are the security for the money that's invested into the fund. And so we can always fall back on the value of these properties if something doesn't work out on a loan. But that's not the idea. The idea is we have borrowers that have cash reserves, that have great experience, that are working well in the areas where we're lending, and they're just going to take care of business. And we keep a very close watch on execution of our borrowers, and we look at the track record of our borrowers to make sure that we're putting money, your money, in good places. And that's what's most important to us. A little bit about Texas. I love Texas, whether it's a state or whether it's a nation, it's up for debate. But certainly, Texas has been a place to be, really, for a long time. I'm from Austin, Texas, so for me, it's always been the place to be. But if you look, we have great growth. We've added more people than any other state since COVID. We've added more business, more jobs. In fact, and I kind of hope this doesn't happen, but we've been reading recently about projections that Texas is going to surpass California in population to become the most populous state by 2045. We'll see if that happens, right? 20-year runway. But I was checking my stats today, and they're saying that by that time, if things hold, Texas will have 45 million people. We have one of the largest economies in the world as a state, and we've had a ton of companies relocate their headquarters to Austin, Dallas, San Antonio, all of these different areas that are in our geographic area. So, and that's part of the reason why we like being along the I-35 corridor. If there's a bright spot within a bright spot, it is the I-35 corridor. Nothing against Houston. Houston's a great city, great industrial base, petrochemicals, a ton of stuff happening in Houston. But for real estate investment, I really love the I-35 corridor, and it's easy for us to get to, and we have more business than we can fund along that corridor. So that's really going to be our focus. So for those that are thinking about real estate lending or having notes, Texas is just a great place you want to be, because on the real estate side, you want to be, whether you're owning real estate or whether you're lending against real estate like us, you want to be in a growing area where people want to be. You don't want to be in states or cities that are shrinking. We complain about the traffic here all the time, but you want to be in a place where there's a few too many people and they keep coming. You also want to be in a place that's reasonably affordable. Austin's gotten a little bit more expensive over the past few years, but compared to the major cities of the country, we're already we're in good shape. I mean, we're fairly affordable. Prices have come down a little bit in the last 2 years, which has helped that. So it's a great place to be, and we have a great future ahead of us. And Austin is growing north, it's growing south. For those that are from Texas, San Antonio and Austin are almost becoming a city in and of itself, almost a little bit like what you have up in Dallas with Fort Worth and in the Metroplex. So, Texas, I could talk about it for a long time. It's a great place. It's a great real estate market, and that's why it makes so much sense to either lend on real estate or even invest in real estate over the long term. So, Texas, and happy to answer any specific questions. These are some of the places, these are some of the companies that have relocated their headquarters to Dallas and Austin and San Antonio, and this is just a few, but these are some big ones. SpaceX, we've got Elon Musk's gigantic Tesla factory that's over here in Austin. A lot of manufacturing that's coming in. Apple's been adding more people here. it's a happening place. It's a little hot. That's the only bad thing. So I'm not saying you should come here. I think we have enough people for now, but everyone else is. And if you do want to come and meet us in person, we welcome that and enjoy that. So I want to move just towards a little bit of a summary. Almost finished. I want to go back to who this fund is really for. And it is for, again, accredited investors who are looking for stable monthly income, who want to know that they can make an investment and have their capital deployed, who can expect a simple rate of return on a monthly basis and know that that you can count on it, and also know that what's behind it, both the strategy and the assets, are solid. This is the process that we've been running for years, and the real estate market here is stable. It's only getting better. It's a great place to be, and we don't have enough capital to satisfy the demand that's out there. So if you would like to come in and meet with our team, maybe on a Zoom meeting, or if you're welcome to come in place, really, if this is something that's interesting for you, I invite you to let us know. There's going to be a little survey that comes up at the end that says, this is something that I want to take a next step on. It's not a commitment at all, but it's you saying, this is something that I want to learn more about. Or it could be something where you say, this isn't the right time for an investment for me. Maybe keep me on the list, and I'd like to hear more over time. Or it could be something where you're saying, this is not for me. I like crypto, right? I like really high returns. Completely acceptable on that side, because this really is for someone who is looking to keep their capital safe, who's looking for regular monthly income, and who likes the capital preservation and stability that comes from real estate. Again, the fund is going to be launching in about 60 days or so. We're taking care of the paperwork, but part of this webinar was to see what is the interest in our new fund. And again, we thought we were going to have a few participants, and we maxed out the limit at 500 people. So I think that tells us that people want this type of fund. They want this type of stability and predictability in their investments. And so I would invite you to, when we do this little poll, just go ahead and click through so we know exactly who's interested in getting a phone call back. And we'll set up a Zoom meeting. What's typical is, after this webinar, we'll give you a call, and if you are interested in taking the next step, we'll set up a 30-minute Zoom meeting, ask a few questions, look at suitability, make sure that you really understand exactly what we're looking at as far as strategy and what your expectations are for an investor. And then if you decide to move forward, you'll sign some of our subscription documents, and then either make a wire transfer or send an ACH or even a cashier's check if you really want to. If you want to come by the office, you can do that. But that's what the process looks like. And we're about to launch, and so those that are the first to come in are going to be the first to have their capital deployed in this new fund, expecting a launch probably towards the end of September. A few questions that you might now have. Now, I want to address a few that have popped up on the screen. It says, what if the dividends are not paid in 1 or more months? It's a fantastic question. They will be caught up. We're going to have a 1-month catch-up feature to make sure that you are getting that back interest that you are expecting. We have another question. If someone forecloses on a house, who is responsible for paying that? Well, the borrowers that we have do have a personal guarantee on that house. But if we foreclose on a property, we're going to be taking over management of it, selling that property, and then returning that capital to the fund and then putting it back out. And that is unfortunately something that we've had to do many times over the past 2 decades, but we're very well versed in it. Foreclosing on a property, which in Texas just takes a couple of months, take the property back, evaluate it from the property standpoint, looking at what needs to be done on the property, bringing in contractors to fix it, working with the brokers that we have relationships with, putting that property on the market, getting it sold, and then getting that money returned back in. I have another question that says, what cities do you have rental properties in? Well, I have rental properties in Austin, but our fund, we don't use rental properties as a strategy. We use lending on real estate. And so right now we have loans in Dallas, Fort Worth, Waco, Austin, San Marcos, New Braunfels, San Antonio, and then a couple in some other cities across the state of Texas. But everything that we have is in the state of Texas. And I have another question is, can you speak to the comparison between utilizing subject to acquisitions as opposed to MLS purchases? Yeah, I think really what's important is whatever real estate that you're looking at doing, the first thing that you have to look at is value. Is the value there on that property? Are you using the as-is value, or are you using an after repaired or after completed value? And I think subject to or looking at an MLS, if I'm understanding the question properly, certainly on MLS, you may be able to find a decent property to buy. But what we're seeing from most of our borrowers, they're coming in with some inside information, some inside knowledge, bringing us a property that may not be on the market, purchasing that through our loan, and then going vertical with it. So great question. And if any other questions come up, great. Otherwise, we'll go back to our normal Q&A. Let's see. Oh, one other question. Are these properties, do you invest in single family or multifamily homes? A lot of them are single family, but we might have multiple units on a single lot. So in Austin, we just had a new ordinance that was put in to where you can build 3 units on a single family lot. And so that's pretty popular both here in Dallas and in San Antonio, where you're buying a single family lot, but you're putting multiple units on that lot. That way you can maximize the profit if you're a builder and borrowing against it. So that's typical for us. And for what we would do is we're going to have budgets on each of those units. We're going to inspect the properties as they're being built, and then they'll be sold off, usually individually, which will pay off our loan completely. But great question. We don't really do much true multifamily right now, which is more like your apartments or 20 or more units on that side, only because we feel like there's a little bit of instability in the multifamily side of things, and it's a little bit more consistent performance on the single family side. But great question on that. Any other questions that anyone would like to send over? Okay, let's go back to our Q&A real quick then, and we'll just finish out. Instead of going through each of these, I would say, what are the most important considerations here? One is, if you're wanting to become an investor, certainly any money that you have in regular accounts works. You can use self-directed IRA funds or even just IRA funds, certainly if you have them at Fidelity or Schwab. It's a fairly simple thing for us to be able to facilitate for you. Got a question here, how are the deals selected? And they go through an underwriting committee. It's very important that we have that loans fit our underwriting box, and so that they're suitable for putting into the fund, suitable for our investors. And those are going to be projects and borrowers that we believe will be successful, that are going to have, that will have a good track record. And they're properties where we think people want to go and buy. That's the big deal. We want to make sure that there's value, that there's a strong market, that there's a track record from the borrower, and that they have a great exit strategy. Because ultimately, we want to be paid off after we've loaned that money, after we've generated that return. So good question there. And really last, can I speak with someone before investing? Of course. We only want you becoming one of our investors if you are very comfortable with the product, if you understand what the strategy is, and if you're comfortable working with us. We want to have great long-term relationships with our investors. Again, really, we look at our investors as the Stallion investor family. I like close relationships. I want to be able to take care of the needs of our investors, listen to our investors, and be there for whatever they need. And so we hope that you'll contact us, let us know if you're interested, more about the fund. And we have another question coming in, sorry, just one second. Can you share the term sheets for the loan products you're offering? Yes, with our investors, we were happy to show you the underlying assets inside of our funds. In fact, some of our family office investors like to invest directly into our loans versus going into a fund. And for all of those, the specifics of the loans that we're funding are always shared with those investors. So great question on that side. Let's go back to the presentation for a second, please. Fantastic. Okay, so you can use our QR code if you like to go ahead and book that next appointment. We'll be reaching out to anyone who filled out the survey that said that they are interested in taking next steps. I want to make sure that that survey has been posted, just with my team, that's been posted and filled out already. I just want to get a green light on that. Great. And I just want to thank you, everyone, for participating in the webinar. Thank you for the polls that came up. Thank you for your time. I hope this was valuable to you. Any questions that you have, whether it's about our fund or just real estate, debt investing in general, be happy to have a conversation with you. Just know that I'm available, and I'd always welcome you, if you're not in Austin, to make the trip down. We'd love to show you around, drive you around the properties that we're lending against, and show you how we can earn your trust. And we would love to help you out with an asset, with a fund that provides stability, predictability, 8.5% returns, all while being secured by fantastic Texas real estate. Thank you for your time. Take care.